Hello and welcome to an episode of the Johnson Leadership Series. I'm your host, Jason Johnson, founder and managing partner of executive search firm Johnson. Today I'm joined by John Doumani, CEO of Zip Industries, makers of the famous Hydro Tap. We're going to hear from John about the story from taking Zip Industries from a family-owned business through the successful growth under the ownership of Quadrant private equity to the subsequent trade sale to Culligan, which in itself is owned by Advent International.
Thank you, Jason. This is just like Parkinson.
Indeed.
You look the part.
Thank you. Today we're joined by John Doumani, CEO of Zip Industries. And John, I'd like to particularly focus today on the story of you joining a family-owned business, the Quadrant ownership, and the subsequent sale to Culligan, which in turn is owned by Advent International.
Yep, absolutely.
Before we dive into that, however, I'd like to share a little bit of your biography.
Sure.
So at a very early age, you were thrust into the lead marketing role for Johnson & Johnson in the US business, running a team of 90. Yep. Returned from the US to Australia to run the Australia-New Zealand business of J&J.
That's right.
And then you had a succession of promotions that took you through scale and complexity, joining Campbell Soup to run the billion-dollar Australia-New Zealand Pacific business, then promoted to run the international business of Campbell Soup,
Yep.
$2 billion business.
Yep.
And then progressing in 2007 to join Fonterra as the MD Australia-New Zealand, running a $3 billion business.
That's right.
Tremendous scale and complexity.
Yeah.
In 2013, you stepped out of Fonterra and you joined, ultimately, Zip Industries, a family-owned business that had developed some tremendous innovation from the western suburbs of Sydney. What drove that decision?
Well, it was an interesting one. You know, I'd spent nearly 40 years in food and grocery in Australia and internationally, and in you know, as you've outlined, pretty big roles. I was ready to try something different, to be honest, and look for a new challenge. And so as I was looking for that, the opportunity came up actually to go into Zip and just do a bit of consulting work for them. Zip had been acquired by Quadrant in December 2013, and this was a few months after that. And they felt they needed a bit of help, particularly in marketing. And so I said, yeah, I'd be willing to come in and help for a couple of days a week. Gave me a chance to, at that stage, I think, get out of my wife's hair because I think I was annoying her a little bit. But it gave me a chance to sort of, look at a business from the inside. Not worked in private equity before, so it gave me a chance also to just get a feel for how that would be. And I thought I could add some value, and I actually thought I could learn something, So I actually went in initially on this consulting capacity. The business had been sold, as I said, December 2013. Michael Crouch, who was the founder and the owner of the business and who ran it he was the business.
Since 1962, I understand.
That's correct. Had left the business in December 2013. And so, it was a real state of transition for the business. That you lose somebody like a Michael Crouch out of the business, and it's his business. There's a void. I came in to help out, and in that process, over the sort of couple of months that I was helping out, the role of CEO became available. And as I looked at the business, doing the consulting work, the more I looked at it, the more I thought, this is a really cool business. Significantly smaller scale than anything I'd done before, but that's never really been a key area of focus for me. I looked at the business and I thought it ticked a lot of boxes for me personally. It was a new market, which I thought would give me the ability to learn and grow. It's a business that was international and a very unique business because Zip is an Australian business that plays on the world stage and is seen as being a global innovator in its space, particularly with the Hydro Tap product. We were the first business back in 1975 to invent an instant boiling water product, first in the world. We were the first to take that product off the wall and put it under the sink and put a nice tap above it, which was the birth of Hydro Tap 25 years ago. The first to add chilled water capability to it, the first to add sparkling water. So it's this interesting business, quite unique, that's an Australian business, products developed here, manufactured here, but plays on the world stage as the global leader, really, and certainly the global innovator, the market leader here in Australia, the market leader in New Zealand, market leader in the UK. And I thought that's quite unique. And the other thing that was appealing to me was it's a business that had enormous growth potential. You know, food and grocery it's challenging. You know, we tend to be over-indexed in consumption of most food and grocery items in Australia. You know, it's an incredibly competitive environment, and then you've got a very concentrated customer base. Always challenging. This business, the Zip business, you know, had enormous opportunity for growth. It's very on trend. It's about drinking water in a very convenient way, very sustainable way, and still had enormous upside in terms of penetration in the office environment, which is what the business was built on, and massive white space on the residential side. You know, plus we're in Australia and New Zealand, the UK. There's a lot of white space in the world out there, not just for Zip but for everyone. And so I saw it as being, you know, a really unique opportunity. The scale of it was smaller, but had a lot of real opportunities, and a complex business also, because you also have not just the sale, but then you have the great opportunity with the aftermarket piece of the business, the service and aftermarket piece. So I put my hand up when the role of CEO came. It was a tough process, I've got to say. You know, Chris and Alex at Quadrant, you know, ran a really tight process around you know, putting the right candidate in. I think they saw my background in the big corporate roles, and thinking, well, okay, he's a big corporate guy, but is he an operational guy? You know, I've always prided myself on being able to sort of zoom in and zoom out, which I think you've got to do. I knew I had no problem getting operational. And so, you know, quite an extensive process, and I was lucky enough at the end of it to get the role.
Fantastic. So you ultimately join on a full-time capacity as the CEO.
Yep.
Into a family-owned business by history and a long and proud heritage. What did you find on arrival?
Well, look, there are a couple of real positives, to be honest, in the business. You know, when I came on board, first of all, you know, as I've mentioned, just a great business that had enormous growth potential. You know, that in itself was a huge positive, and some great people who were really passionate. You know, they felt they were part of something special, and you know, a strong manufacturing business based in Australia that ships to the world. You know, you have Zip taps in Buckingham Palace, and they're made here in Condell Park. You know, people feel that's special, and it is. So I had some great people. So they were the two key positives, but there were some challenges, to be honest. Coming out of a family-owned model, and especially a Michael, it wasn't family, it was Michael. And you know, Michael was such a strong and inspirational leader. You take that away, there was a huge void of leadership in the business. And so, you know, that I saw as a real, you know, as a real area that needed to be focused on the building up of leadership. Similarly, I think there was no clear vision for the business. Everyone knew there was great growth potential, but there was a million opportunities. And the question were we clear and focused to the ones that we were going to go after, the ones that we needed to focus on that were going to be the biggest opportunities, and do those well? We ran the risk of trying to do a million different things badly. So there was no clear articulation of purpose and you know, strategic direction and priorities for growth in the business. And then I think the third area of opportunity, there was some significant gaps in processes and capabilities. A family-owned model, you know, there were some real gaps in terms of some capabilities and processes that needed to be built up. So a couple of real strengths and positives in terms of, you know, just the business opportunity and certainly the people, but a void of leadership, a lack of clear direction, and thirdly, you know, some real gaps in processes. And so that was sort of what I felt I inherited 5 years ago.
Great. And when Quadrant came in December 2013, what was their investment thesis?
Well, I think they looked at the folklore, let's call it folklore, is that Chris Hadley, you know, wonderful Chris, was going to the airport one day, and there were some ads for Zip on the billboards as you're going towards Sydney Airport. And that sparked his interest in it. And then as he looked at the business, I think what they saw was a business that, as I said, quite unique, a real growth opportunity here. A business that is on trend, that is, unique in what it offers and certainly seen as a global leader. And an Australian-based business, you don't get many of them. And so I think their thesis in buying the business, and it happened to be actually at a time when Michael Crouch was looking for, a potential buyer of the business. So it all sort of came together, and I think, their thesis was very much around this is a business that has tremendous growth potential, has the ability to play even harder in our existing markets, but also the opportunity to play on a broader scale globally, and that was what they saw as the real opportunity.
Well, let's turn to growth and your growth strategy. With the benefit of hindsight, what worked and what would you have done differently?
I think, if I can explain what we decided in terms of priorities for growth, and it was pretty simple, really, to be honest, but it needed to be clearly articulated, I think. The first priority was HydroTap, commercial HydroTap. That was the biggest single product in the portfolio. And Zip at that point, 90% of our business was in offices, installations in offices, and HydroTap was the key. And whilst it had been around for 25 years, and in Australia in particular was our biggest market.
70% penetration in Australian commercial environments?
70% if you're in this part of town,
yeah.
In the big buildings and down in the CBD. You get out of the CBD, there's a lot of empty space. We were estimating that on total it was still only about 20% penetration in offices.
Yeah.
And so the first priority was continue to grow commercial HydroTap and hopefully accelerate that growth. Because there was still significant upside in our existing markets of Australia, New Zealand, UK. The second area was the aftermarket, what we call aftermarket. So that's service, parts and labour. That's a third of our revenue. Very important part of our revenue. It's a tremendous part of the business, and it still had enormous growth potential also, because as the installed base grows, then the demand for service and consumables goes up with it. And we knew that we were still underdeveloped in that space, even on the installed base that was out there. So that was the second. Not rocket science, but very important to articulate clearly that if we're going to put any focus behind anything in existing, it's commercial HydroTap and aftermarket. And then there were two new areas of opportunity that we thought were going to be the biggest opportunities. The first was residential. At that point, we were probably in about 1%, if that, of homes. And it was not really an area of focus or capability. We knew how to do business in the commercial space. We knew that route to market. We knew the relationships that we needed to have, and we knew how to generate a sale in that space. Residential is a bit different. It's a different route to market. It has different levers that drive it. So whilst we had some business in residential, it was really just as an offshoot of commercial, wasn't focused on. We thought that's a big opportunity. And then the other new opportunity was new markets. But we knew we didn't want to get too ahead of ourselves there, because we still had opportunity in our existing markets, but we thought, let's put a toe in the water. Let's put a toe in the water in one market and just see how we go. So that was the growth. Commercial HydroTap, aftermarket, residential is a new big opportunity, and international expansion, albeit in a step-by-step manner. And that's really what we were executing and executed certainly, and still are. So that set of priorities has served us well. I think if there's any learning, I think we were probably a little bit overly ambitious in the international expansion and how easy it is to do that, or how long it takes. This is a business that has relatively long lead times. You have to invest a lot of time and energy in building the relationships to get our products specified. You have to have people on the ground that deal with architects and designers and facility managers and hydraulic engineers and end users, and build those relationships to finally get your product specified. And then once it's specified, it can take a year or even more to actually see the sale, because we're one of the last things to go in. And so I think we were a little bit overly ambitious in terms of how quickly that was going to go, and so it went a little slower. That was a learning. Residential has been tremendously successful. but we needed to build new capabilities to do these things. So, yeah.
Well, the growth strategy obviously worked. I understand that Quadrant trebled their investment at the time of the sale and crystallisation, so congratulations. I'd love you to talk us through the decision framework. In 2016, I understand the group was exploring IPO, but ultimately culminated in a trade sale to Culligan, owned by Advent International, another private equity firm. If you could talk us through that journey, that'd be great.
Yeah, that was a great journey. I think, we went through the initial, if I think about the last, I've been there 5 years now, the initial phase was the building phase. So as I said, coming in, some strengths, some areas that needed to be built up, leadership, some capabilities on the business, building a strong culture in the business to replace that was all about Michael. That was the first sort of couple of years. We built some capability, particularly around CRM capability, building our residential capability, understanding how to do business in the residential space, building a strong culture in the business. And then we sort of moved into the second phase, which I would call the accelerated performance of the business. So sort of into the year 3, we had a business that was really, it was always performing well, but we'd kicked it up. We were starting to see the benefit of all of that building. We were seeing higher levels of growth than we'd seen before, and a higher level of margin than we'd seen before. So our bottom line growth was growing even faster than the top. That's always a good thing. And I had a leadership team in place that was, I think a really strong team of people that I'm very proud to be part of. So we felt that the time was right now to start thinking about the next phase, which was the sale process. It was a dual process. We kicked it off in August 2016. The whole process went for 14 months, so it was pretty intense. We kicked off initially with a trade sale process that generated a lot of interest because, as I said, we are a business that's known globally, recognized as the innovator in our space globally, recognized as having a product that is quite unique. So there was a lot of interest. So we went through, and the initial phase was really focusing on the trade sale. And then on the part of Quadrant, I think, working with the banks, there was a realization that there was potentially greater value at going into IPO. And so at that stage, we turned our focus away from the trade sale and went for the IPO, which was a very concentrated period of time. For me, it was just a great experience. I'd not done an IPO before. I actually really enjoyed it. It's pretty intense. So we went through the whole IPO process, 100 and whatever, presentations and everything that entails an IPO. And we got right up until literally the last 30 minutes, literally. And what had happened at the beginning of the process, the feeling was that the market was right for an IPO. But these things, can shift. The window can open pretty quick, but then it can close pretty quick. And by the time we got to the end of the process, I think the feeling was the market had closed a bit and was not as buoyant and as ready and as accepting of an IPO as we felt at the beginning of the process. And so we went through the whole process. We got to the end of the IPO literally 30 minutes before signing off on the prospectus and issuing it to the stock exchange. But I think the feeling was there was a concern that, look, maybe the time wasn't right. The market had turned a bit. There'd been some IPOs that hadn't gone quite so well in the immediate past, and so the feeling was on the part of Quadrant that, look, it's not the right time. Either we'll go back and explore the trade sale options, and specifically Culligan, because they were the lead at the end of the trade sale process, or I think Quadrant were very happy to hold on to the business, for a while longer because they could see how well it was doing. So we then re-engaged with Culligan, and as a management team, we always felt, we were always very excited about the option of an IPO, but we also felt that strategically there was some real appeal of having a strategic buyer like Culligan, a business that had very complementary products to ours. What we did, they didn't do. What they did, we didn't do. Very complementary geographies. Where they were, we weren't. Where we were, they weren't. and also had an international presence that gave us the ability to really take the international expansion to a new level. So whilst IPO was an exciting option for us, strategically as management, we sort of felt like there could be even more opportunity for the future of the Zip business by being part of a business like Culligan, because it gives us a little bit more momentum to build the business internationally than if we're just an Australian entity sitting down here trying to expand into markets, big markets, the US, for example. So we had wonderful interaction with Culligan through the trade sale process, and so we were happy to re-engage. It was quite a rigorous due diligence process. Went for another 3 months. Pretty
intense.
Was
exclusive at that stage.
Yes, it was. And they were great to work with. Advent were great to work with. They were true to their word every step of the way, but they were very rigorous. They, a lot of scrutiny. But we'd been through the IPO. And one of the great things about going through the IPO, boy, you get asked every single bloody question you'd ever want to be asked on the business. And so, we felt that we were prepared. The other thing that I should say through the whole process that's really important, not only did we have a business that we thought was ready for IPO, we had a leadership team that was in place that was ready to handle the business through all of the turmoil of a sale process. And so whilst myself and Steve, my CFO, were very much preoccupied with the sale process, I remember right at the beginning of the process, it was pointed out to us, what's really important, you've got to hit every month. As we go through this, you've got to hit every month. I'm like, yeah, I thought we always had to do that, but that's okay. No. We hit every month, which is what was important, I think, was as we moved into the sale process, we had a strong team of people in place running the business that didn't skip a beat. And while Steve and I were off, very busy on the sale process, we had a lot of confidence that the team were there in order to deliver every month, and we did, So that whole process took around 14 months. And we finally, after a pretty intense due diligence process, we signed the deal and the business was officially, we became part of Culligan on September 1, 2017, 2 years ago.
Brilliant. Yeah. And one of the things I love about that story is that post the sale to Culligan, I understand that under your leadership, but the management team have helped drive the business to achieve all of the KPIs that the new owners have set, in fact, overachieved many of those.
It's been great. Look, it's always an interesting little challenge that we were focused very much on making sure Quadrant got a really good value on an exit, because that I saw as my responsibility. And I'd like to think that that they feel happy with what they got on the way out. Then, because of course we then had to become, we were part of Culligan, then the focus becomes now we want to make sure that Culligan feel like they got a really good deal on the way in. And so we'd come at the end of this 14-month process, I think we were all feeling a little bit like we wanted to go out and celebrate and, kick our heels up a little bit. But the deal was, the transaction was completed September 1. Culligan's financial year is January to December. So we knew that we had a 4-month period before the start of the first full financial year under Culligan. So what we said to ourselves was, look, I know we've been through a lot and we want to go out and celebrate, but let's really put in the effort between September through to December to really prepare ourselves to hit the ground running from January 1. And what was really, and so we did some really intense streams of work. What was most important was we did work around strategy to confirm our strategy and make sure that everybody within within Culligan and Advent were aligned behind what our strategy was. And we had some help from Bain around that, and that was great. It was pretty much confirming what we had, but there were some really good enhancements to that. And then we did our own 5-year projection on the business. And the good news with that was it was above the acquisition model that Culligan had put together to buy the business. But what was really important in that, I felt, was quite often you see when a business is bought, that 12 months down the track, the numbers aren't being hit. And the acquirer is like, what's going on? And the acquired company goes, well, we didn't do the projections, they were your projections. I wanted us to own it up front. Yeah. So that process that we went through from September through to December, where we confirmed the strategy and got alignment throughout Culligan on that, we did a strategic plan projection on the business that we owned, that no one gave us, but we owned it. We then put in place our budget for the next year, and then put in place a really good process that Culligan actually gave us, strategy deployment process, which was taking that budget and breaking it down into very clear action plans at every level of the plan, ready to hit the ground running on January 1. So, after everything we'd been through with the sale, it was a pretty intense few months, but it really was important. And the great thing was we always felt culturally very much comfortable with Culligan. They're great people, it's very like-minded. It didn't feel clunky in any way, which is sometimes quite exceptional, I think. So we got to January 1. We delivered, in the meantime, the numbers that were expected through September, because that's, every month counts. And then we really hit the ground running in January 1. We certainly exceeded the acquisition model in 2018, and we're doing well in 2019. So I'd like to think through all of that. We have managed to, first of all, I hope Chris and Alex and Quadrant feel they got good value on the way out. I hope they do. I'm sure they do. At the same time, I think Culligan feel like they got a great deal on the way in. It's been a great process actually.
And John, prior to joining Zip, you hadn't worked directly with private equity teams before.
No.
You've now had the opportunity of working with two leading private equity teams. What are your reflections, and what tips would you share with other CEOs coming into private equity-backed businesses?
Yeah, look, it's been a really positive experience for me. Quadrant were just great. And the thing, to be honest, I have a fundamental philosophy around business. It comes out of my years with Johnson & Johnson and the Credo. And what I believe in is your first responsibility to the men, women and children who use your products, and you never compromise on that. The second is to your employees, that every employee deserves to work in an environment where it's easy for them to do the right things, just get on and do the right things and feel supported in doing so, and that you add value to their skills for the time they're with you. The third is to the community, whether that's around, environmental responsibility or philanthropic or whatever. And if you look after those three, the fourth one, being the shareholder, looks after itself. My concern on the outside, looking at private equity from the outside, was I was a bit nervous that maybe they got it around the other way and went for short-term financial gain at the expense of building the business for the long term. And I've got to say, and because I would have enormous difficulty personally compromising on that, but I've got to say that my experience with Quadrant, and now my experience with Advent, has reinforced for me the fact that they want to do the right thing on the business. Under both ownerships, it's always been about how do we invest to make this a better business for the long term. It's around doing the right things for the long term, not the short term. Building something that is truly something that can last. And so that's been great. And so, the experience that I've had in both cases has reinforced to me that the private equity world is a great place to be. And you can be part of building something that really is for the long term. I think the other thing I'd reflect on is, in my view, every time I've made a change, I've gone from corporates to cooperatives, with Fonterra.
Yep.
Every time and then to private equity, every time I've made the change, people will go, oh, well, it's going to be different now. The basic principles are the same. I think no matter what your ownership structure is, what people want is they want you to come in, they want you to do the right things on the business, they want you to build a stronger business and deliver great results and do the things that will make the business last into the future. So there's a lot more that's similar than than is different. I think that the thing I like about the private equity side is it does give, I've been much more operational than I was. To be honest, in the corporate side, as I got further and further away from actually operating businesses, because certainly in Campbell Soup and in Fonterra, I had operating units reporting into me. The further I got away from being at the coalface and really living and breathing the business every day, the less fun I had. And so what I like about the private equity side is it gives me the chance to really get my arms around the business, to to get into the business, to be part of the business, to do the zoom in and zoom out. I get to zoom in a lot more than I used to. And I think anyone coming into a business in this space, I think needs to be willing to do that. I think, you know, you need to be willing to do that. You need to be willing to do the zoom in, because you're not going to be able to just stay zooming out. Now, for me, that happens to be exactly what I love to do. And so it's worked well for me. But you do have to be prepared to do that, you know.
Fantastic, John. Well, thank you for the incredible insights and candour.
Great. Thank you.
And again, congratulations on the incredible success that you and the leadership team have achieved with the Zip Industries business.
Thanks, man.
Thank you.
Yeah.